Hey everyone, you ever see the stock market do a complete 180? I mean, one day it's pure panic, the next day it's a massive rally. Well, that's exactly what we're breaking down today. We're going to look at how just one single sentence managed to flip the entire market on its head. So, that's the big question, right? What on earth can flip market fear into pure optimism, like literally overnight? We're about to pinpoint the exact moment, the one trigger that turned billions of dollars in losses into massive gains, almost in the blink of an eye. Just look at this contrast. It's night and day. On Monday, you had total panic. The Sensex plummeting over 1,300 points. Crude oil was soaring toward $120 a barrel. And that fear gauge, it was spiking like crazy. But then Tuesday rolls around and bam, a total reversal. The market rallies, crude oil tanks, and all that fear just evaporates. Okay, so before we can really appreciate the comeback, we have to set the scene. You need to understand the panic that was gripping everyone. The market was seriously on edge, and trust me, it wasn't for no reason. I mean, it was basically a perfect storm of bad news. You had this escalating geopolitical conflict, which of course got everyone super worried about global oil supplies. On top of that, crude prices had already shot past the $100 mark. And to make matters worse, foreign investors were heading for the exits, selling off for 7 straight days. The mood? Yeah, it was tense. So how do we actually measure all this anxiety? Well, that's where something called the India VIX comes in. The easiest way to think of it is as the market's fear gauge. When the VIX goes up, it means investors are getting nervous and are expecting some really wild swings ahead. And just how high did it get? The VIX rocketed to a 21-month high, touching almost 25. That's a massive 70% surge in just a month. It was a crystal clear signal of just how real the fear had become in the market. But then, in a single moment, everything changed. One sentence. That's all it was. One sentence became the pivot point for markets all around the world. And this was it, the game changer. A simple statement from the US president suggesting the conflict could end soon. You know, in today's hyper-connected markets, where algorithms are scanning headlines and trading in milliseconds, a sentence like this isn't just news. No way. It's a massive, massive financial signal. It was that little glimmer of hope, that hint of de-escalation the market was so desperate for. And just like that, it completely flipped the script. The effect was immediate and frankly incredible. That one sentence unleashed this huge wave of relief that just washed over the financial world, and it triggered a huge rebound. The very first place we saw this was in the oil market. I mean, look at this chart. Brent crude went from a high of nearly $120 on Monday all the way down below 90 on Tuesday. That's a massive drop, and it instantly calmed down those big fears about inflation and supply issues. And what about our fear gauge? It absolutely cratered. The India VIX fell by almost 14% in just one day. You can almost picture investors everywhere breathing this huge collective sigh of relief. And of course, all that good feeling flowed right into the stock market. Both the Sensex and the Nifty 50 snapped their losing streaks, posting some really solid gains and ending the day up by almost a full percent. Now, if you want to put a number on that rally to really get the scale of it, get this. Investor wealth shot up by a mind-boggling 7 lakh crore rupees. That's how much value was created in just one single day of trading. It's just staggering when you think about it. So let's go a little deeper than the headlines. What were some of the key signals that traders were watching? Let's decode a couple of important concepts here that really help explain the mechanics of what was going on. Okay, first up, the idea of a safe haven asset. You see, during all that panic, investors were flocking to things like gold, which is a classic safe haven. When fear is high, people want to put their money somewhere that feels safe, and that's exactly why gold prices were surging before the turnaround. Another really key indicator to know about is the Gift Nifty. Because it trades for almost 21 hours a day, it gives traders an early clue about how the Indian markets might open. So, when the Gift Nifty is looking strong, it's often a good sign for the Nifty 50 later in the day. So, after all that whiplash, all that volatility, what's the real takeaway for the average long-term investor? What's the lesson here? Well, even with the big rally, the most crucial takeaway seems to be caution. As one chief investment strategist, VK Vijayakumar, put it, things like wars can have totally unexpected consequences. The situation could always change again, so it's really important for investors to stay alert and just wait and watch. But this also leads to a really powerful long-term perspective. For those of us investing for the long haul, many experts will tell you that these short-term crises can actually be buying opportunities. The key is to just stick with your plan, continue that systematic investing and trust that the fundamental strength of the economy is solid enough to get through all the global noise. And that leaves us with one final big question to think about. This entire roller coaster ride was kicked off by a single headline. So for all of us as investors, the real challenge is, how do you learn to tell the difference between a meaningful signal and all the deafening noise from the 24-hour news cycle? Something to chew on. Thanks for tuning in.